If you are receiving the age pension in Australia, or if you are about to apply, then the next few minutes could be the most important minutes of your week. Because right now, in April 2026, the Australian government has rolled out some of the biggest pension changes we have seen in years. And if you are not aware of these changes, you could be leaving hundreds of dollars on the table every single fortnight. So stay right here, because today we are going to break down everything you need to know, step by step, in plain and simple English. Welcome to Aus Pension Update, the channel dedicated to keeping you informed, updated, and financially confident. If you are new here, make sure you hit that subscribe button and turn on notifications because we cover every pension update, every Centrelink change, and every financial tip that matters to Australian retirees and seniors. Now let us get straight into it. So what exactly is changing in April 2026? Let us start from the very beginning so that everyone watching, whether you are already on the pension or just planning ahead, can fully understand what is happening and what it means for your wallet. The first and most important change is the pension rate increase. Every 6 months, the Australian government reviews and adjusts the age pension payment rates in line with the Consumer Price Index, also known as CPI, and the Pensioner Living Cost Index. This is called indexation, and it happens in March and September every year. However, the April 2026 adjustment is particularly significant because the cost of living in Australia has continued to rise sharply, and the government has responded with a more substantial increase than many people expected. As of April 2026, the maximum fortnightly age pension rate for a single person has increased. Couples are also seeing higher combined payments. These increases apply automatically if you are already receiving the pension. You do not need to call Centrelink, you do not need to fill out any new forms, and you do not need to visit a service center. The new rates will simply appear in your next payment. However, and this is very important, if your circumstances have changed recently, for example, if you have sold a property, received an inheritance, changed your living arrangements, or your partner has passed away, then you absolutely need to update your information with Centrelink. Failing to do so could mean you are being paid the wrong amount, and that could lead to an overpayment debt down the track, which nobody wants to deal with. Now let us talk about the income and assets tests, because this is where things get a little more detailed, but it is critical information that affects how much pension you actually receive. The income test determines how much you can earn before your pension starts to reduce. The assets test looks at the total value of what you own. Both of these thresholds have also been updated in April 2026. The income-free area, which is the amount you can earn per fortnight before your pension is affected, has been lifted. This is great news for pensioners who are doing a little part-time work or who have some investment income coming in. It means more of your money stays in your pocket before Centrelink starts reducing your payments. Similarly, the assets test thresholds have been adjusted upward. This means that some pensioners who were previously receiving a reduced part pension may now find that they are entitled to a slightly higher payment. And if you are someone who was just over the assets limit and not receiving any pension at all, it is absolutely worth checking your eligibility again right now, because you may now qualify. The assets test lower threshold for a homeowner single pensioner has moved up, and the same applies for homeowner couples and non-homeowner singles and couples. Each category has its own specific numbers, and we strongly recommend you check the current figures directly on the Services Australia website or by calling Centrelink on a 132 300 to get the exact numbers that apply to your specific situation. Now, another major change that came into effect this April is related to the work bonus scheme. If you are an age pensioner who is still working, even casually, the work bonus allows you to earn a certain amount without it affecting your pension. The good news is that the work bonus balance cap has been increased. This means you can accumulate a larger unused work bonus balance and use it to offset future employment income. This is a fantastic incentive for those pensioners who want to stay active in the workforce, even part-time, without worrying about losing their pension payments. Let us also talk about rent assistance, because for those pensioners who do not own their own home and are renting privately, this supplement makes a very real difference. Rent assistance rates have also been updated in line with the April 2026 indexation. If you are renting and you are not currently receiving rent assistance, or if you think you might be receiving less than you are entitled to, please check with Centrelink immediately. Many pensioners are not claiming this payment simply because they do not know they are eligible. Now, here is something very important that we want to highlight. There is a lot of confusion out there about what counts as an asset and what does not. Your family home, the house you live in, is not counted as an asset under the assets test. This is called the principal home exemption. However, if you move into aged care, or if your home is rented out, the rules around this can change significantly. The April 2026 updates also include some clarifications around granny flats and retirement village agreements. So if you are in one of those situations, it is worth getting specific advice about how the rules apply to you. Another area that affects a growing number of Australians is superannuation and how it interacts with the age pension. If you are under the pension age and your super is still in the accumulation phase, it is generally not counted under the assets test. But once you reach age pension age, your super balance is assessed. With superannuation balances growing larger for many Australians, understanding this interaction is more important than ever. The April 2026 changes do not dramatically alter the super and pension rules, but the updated thresholds do mean the interaction plays out differently at different balance levels. We also want to mention the pension supplement and the energy supplement, because these are two additional payments that come on top of the base pension rate. The pension supplement helps with everyday costs like bills, medicines, and household expenses. The energy supplement is a regular payment to help with energy costs. Both of these have been updated and are now reflected in the new fortnightly payment amounts. You do not need to apply separately for these. They are included automatically in your pension payment. One more thing we want to cover before the outro is MyGov and online account management. Services Australia has been improving its digital services, and we strongly encourage every pensioner to have an active MyGov account linked to Centrelink. This allows you to check your payment details, update your information, report income, and track any changes to your entitlements, all from the comfort of your own home. If you need help setting up MyGov, you can visit your local Services Australia Service Centre or ask a trusted family member to help you get started. Staying on top of your account online is one of the best ways to make sure you are always receiving what you are entitled to. So to summarize everything we have covered today, in April 2026, age pension rates have increased due to indexation. Income and assets test thresholds have been lifted. The work bonus balance cap has gone up. Rent assistance has also been updated. And there are important clarifications around housing, superannuation, and aged care interactions that every pensioner should be aware of. These changes are designed to help pensioners keep pace with the rising cost of living, and it is important that you know your rights and your entitlements. Thank you so much for watching today's update here on AUS Pension Update. If you found this video helpful, please give it a thumbs up and share it with a family member or a friend who might also benefit from this information. Every share helps us reach more Australians who need to know about these important changes. And if you have any questions about your own pension situation, drop them in the comments below and we will do our best to help. We are here every week with the latest updates, so make sure you are subscribed and have notifications turned on so you never miss a thing. Until next time, stay informed, stay confident, and take care of yourself. This has been AUS Pension Update, and we will see you in the next video.